Hey everyone, welcome back to the Chapple Show. In this video, we are going to talk about why I don't buy stocks right now. So that's the thing I want to stress, the right now part, because in the past four or so years, I did invest a lot in stocks and I did pretty well. I had that 2-year span where I had like an 80% ROI, which was unbelievable. And then the other 2 years before that, I had 10 to 20% returns, which was pretty good. But I want to talk about, why I don't buy stocks right now. So I get a bunch of emails and tweets and Facebook messages. And, I would say top 5 most common question I get is, what are some stock tips you have right now? Stocks are you buying right now? What are you bull on in terms of stocks? How do you like this stock? And I always answer back, if someone asks me about a specific stock, I'll answer back, what I think about it. And usually I'm pretty right. The majority of the time, I'm right on a stock that they ask me about. But sometimes I'm not. So, but I always end up telling them that I'm not really buying a lot of stocks right now, period. And that's for a few reasons, which I'm going to talk about in this video. I guess the main one, which I've talked about before in previous videos, I just kind of gave away the answer there, is business. That's just, I know I've talked about this so much, and I just really want to drill it into everyone, because I keep getting asked about stocks, and everyone thinks that they're going to get rich off stocks. Now, guess what? A lot of most day traders, I said that, I had a tongue twister there. Most day traders end up losing money. You only hear about the successful ones because they're the ones that actually ended up making enough money to become a public figure. Most people that try to day trade or try to make money in stocks every week, every month, whatever, they end up losing money. Even if they do a bunch of research, that's just what happens when people try to day trade. Most people lose, and then the people like in hedge funds and stuff that have computers doing all the trades for them, they're the ones that are collecting that money from all the people that are failing. Everyone hears about, it's so easy to, make stocks, and you got all these stock gurus out there saying, hey, buy this stock, this one's going to do pretty well. And, I always think in the back of my head, like, okay, long-term stock investing, in my opinion, is very good. That's what I teach. That's what I preach. That's, in my stock market program, that's what I talk about, long-term investing or even medium-term investing. But short-term investing, like day trades, swing trades, even trading every 3 to 6 months can be risky sometimes, in my mind. Always buy for the long term, because that's generally what has done the best for me, and I think would do the best for everyone, because you're not betting on penny stocks. You're not betting on, weird tech stocks that can go up and down. By the way, random tangent. Did you know that Snapchat is going to have an IPO, an initial public offering, where their valuation of their company is like $40 billion, but they haven't made any money in any quarter? Isn't that weird? Isn't that weird how the stock market works sometimes? Anyways, so that was a random tangent. So what I'm trying to say is that everyone gets this misconception that stocks are how you're going to get rich, how you're going to get wealthy, how you're going to get financially independent. No, it is a way for you to use your wealth to get a little bit more ahead, in a way. It's kind of like, here, I'll give you an example here. So let's just say you make $40K a year, $40K, and you put away, I don't know, let's just take a random number, 10K goes towards stocks per year. That's a high number, but 10K goes towards investing. So out of that $10,000, if you get on average, a 6% return per year, which would be, let's just say 8%, because, we'll just say that this person's good at investing, $800 per year. $800 per year over the course of, 40 years with compound interest could be the difference between you being worth, $2 million. Actually, probably not $2 million. I'd probably say, somewhere around 1 million. Could be the difference between you being worth $1 million if you invest it properly, or your counterpart who didn't invest, which could end up, being worth 600K. That's what I like to think about with stocks, is that it's a way for you to get ahead. It shouldn't be your primary source of income. So again, when people ask me stock tips and all this stuff, I mean, I would prefer to put that all of my money into business, which is what I do. I mean, I recently put in $5,000, which I could have put into stocks, but I put it into marketing. And I know I'm going to get a higher ROI on that unless there's some recession. By the way, that's the next thing I want to talk about. I'm not buying stocks right now because, as I explained in that previous video, which I know has done pretty well, the recession video, which I know kind of scared a lot of you, and I got some emails and tweets and Facebook messages about that. The incoming recession. So to summarize that video, there's historically every 3 to 10 years there's a recession since America became a country. There's no exceptions to that. Every 3 to 10 years there's been some sort of recession. Now, our last one was in 2008. Guess what year we're in now? We're 2017. 2017, that's 9 years. So statistically speaking, we should be having a recession sometime in the next year or so, year or two maybe. Maybe this goes to 11 years, but it's gonna happen. And no, it's kind of funny. So one of the reasons why I made that stock video in the first place was because that stock market video I made last year that most of you found me from, I made that because I noticed on Google Trends that people were searching for stock market a lot more on Google, how to invest in the stock market. That's why I made that video. Because I was like, hey, this could get some traction, and it ended up getting some traction. Now, that worries me because do you know what causes a recession? Public confidence in the economy and investing. I know that sounds weird, but here's what happens. So public confidence, so confidence goes up in the stock market. Okay, confidence goes up. So what happens then? Okay, well, I don't even know if I'm going to erase this. Confidence goes up. So then what also happens is that people over-leverage themselves. People over-leverage themselves and that's why, PE ratios go way up, because people overvalue companies. So they over-leverage themselves. A lot of the times they'll borrow money to invest in the stock market, or borrow money to, maybe buy real estate. They'll just borrow and borrow and borrow money because money's cheap. And everyone's like, hey, I've had a job for the past 8 years since the recession. It's time to invest. I have some money now. Things are going great. Everyone's employed. This is perfect. But that's kind of a false sense of security. Now, because as I explained in my recession video, the economy, despite what you may think, it's all cyclical. That's what the economy looks like historically. It goes up and down. Now, sometimes, it actually kind of looks like this. It goes up and down, and then it'll go way up, then it'll just drop down, then it'll go like this, and then it goes way up and drop down. So that's kind of what the economy looks like, in a way. And there's really no escaping it. I mean, the economy is just cyclical. And people don't really understand that. And right now, historically speaking, we should be at the peak of this economic cycle, of this bullish cycle. And I'm a little bit worried for what happens if there is a recession coming in the next year or two, because interest rates are so low. They like the government or the Federal Reserve can't do anything if there is another recession. Like interest rates are at 0.75%. What are they going to do? Put it down to zero? Like, to put it in perspective, in the last recession, interest rates went down from like 8% to 0.25% in order to help artificially inflate the economy. And that it'll probably end up fucking us over. I mean, I think that there's going to be a bad recession coming. Now, there might not be one coming. Or it might be one coming, but it might not be that bad. You never know. But I don't think it's sustainable. I was right about China. I was on record on this. I remember having that conversation, a live stream actually. I had a live stream with 3 of my other YouTube friends. And we were talking about the Chinese economy and how it was growing at like 4 to 6%. And then they were so bullish on it. They're like, look, they're creating all this infrastructure, all these buildings. And I was just like, Yeah, I think that they're inflating those numbers, and I think that a lot of that stuff they're making isn't going to be used, and that economic growth is not sustainable. And I flat out said that, and I remember Dale disagreed with me. Dale from the channel Think Fact, he just flat out disagreed with me. He's like, no, China's doing this great. They're going to overtake the American economy in the next 3 years. I'm like, yeah, I don't think so. And what ended up happening, what, a year and a half ago, we learned that China was overinflating their numbers, like I was fucking saying the entire time. Because just, you can't have a growth rate like that just come out of nowhere and be able to sustain it. I mean, unless there's some rain, unless it was like oil or something, and you know, like, I don't know, like Saudi Arabia finding oil, like unless something like that happens, that growth isn't sustainable. It's just not. So, anyways, what did I go with that? Yeah, economic cycle. So yeah, I'm not really investing in stocks right now. So when people ask me about, yeah, buying stocks, like I can tell you if I think a stock is good for the long term or not, excuse me. But, you know, generally speaking, I'm staying away right now, and I'm just investing in my own businesses, and they're having a much higher return than I'd get in the stock market. I mean, we're seeing returns of 100%, 1,000%, 10,000% on some investments. So just got to invest in your own business, guys. I think that's going to wrap it up. And I'm sorry for making another video on this, but I just want to explain. And, you know, when you guys send me the topic, you know, what are your stock picks for this month? You know, that's my answer. My answer is I'm not investing in stocks right now because business is just doing better. I mean, marketing and real estate, and it's just, everything is going good right now. So that's going to wrap it up. I'd like to thank you very much for watching. Remember, we're a couple of weeks away from this channel being reinvented, which is going to be really, really cool. And you know what? I don't want to spoil anything. So I think we're going to stop there. Thank you very much for watching. You're all very beautiful people. See you guys in the next video.